My name is Chris Roglieri, President and CEO of Commercial Capital Trading Group. I welcome everybody to join us here today. Those of you that don't know who we are, our company here is Commercial Capital Trading Group. We are the world's largest creator of commercial finance entrepreneurs. We've been around for 11 years, actually going on 12 years, and we have put through thousands of finance entrepreneurs through our training. And we are the leading company in the country, non-franchise opportunity. I'm really excited about this live broadcast. This is our first ever live broadcast, and the goal here is to. A lot of people always ask us, what is training like, right? So when I invest into the program, and as we know, it's a 7-day program that our graduates go through. What's a program like, right? I mean, what's training like? So I'm excited. What I'm going to do is actually, there's a live program going on right now, safely via webinar, but it's live, and we have one of our lenders that's going to be presenting, and I'm going to take you in. I'll do a quick tour throughout the office and make our way to the conference room, and then you're going to see me conduct a live training class with one of our lenders. We have 30 people who invested with us this month at all different levels. We have 3 packages. If you go to our website, you probably would already see that. We have a gold level, platinum, and legacy level. We have all mixtures of individuals that are actually all over the country taking part in this training this week. But you're going to get a little sneak peek at what's going on. And hopefully I'll get to talk to you guys sometime in the future, or it would be my pleasure to educate you in the future with your future endeavors to own your own finance company. So why don't you come with me? And the lender we're actually going to, that's actually going to present to our students this hour is a USDA lender. So this lender actually specializes in financing businesses in rural areas. And it's actually a very lucrative opportunity for our graduates because there's not a lot of lenders that specialize in that. And this is just one out of, I'd say, 60 lenders in our training program that you'll be automatically set up to do business with should you come through. So why don't you follow me, and we will give you sneak peek access. Hey guys, I want to bring you full shot.
Hey Chris.
How you doing?
Good, how are you?
Good.
Graduate made $250,000. So now I know you're just coming off the SBA spin, but you're never going to make $250,000 on the SBA loan. I mean, I just be an SBA lender, so they're kind of capped at a $5 million loan. And I don't know what their fees are, but usually it's just a referral fee or something. So maybe it's 1%, but you do the quick math. $5 million and 1% is $50,000. So that was a great deal for us. Great deal for the park. Great deal for the CCTG graduate, so we're happy about that.
Hey Eric.
Hey Chris.
Hey Eric, how are you? This is Chris. We just got in here. Can you kind of repeat that intro if you don't mind? Just because I was a little late getting into class, if you don't mind.
Yeah.
Yeah.
Yeah, I was just telling everybody about the Avenue and our relationship with the CCTG group and how strategic it's been for us. And we've gotten a lot of deal flow from you guys. We went to the conferences obviously last year with the virtual, and I was just talking about how we closed. I closed a $25 million deal November of last year, and a CCTG graduate made $250,000. So that was
that was Ray Johnson. I think he just did a testimonial for us. He made $250,000 on one deal. That's the one you were talking about.
Yeah.
Ray's a good guy.
It was great to work with Ray and work through the whole process. And one of the things, as a CCTG broker, one of the things that we enjoy is that, hey, you guys, once you bring us the deal, you hand it off, right? There's a trust there that you trust me, I trust you, and hey, we need to be kind of hands-on with the borrower to get the things we need. And hey, when the deal closes, you're going to get paid. So that's kind of how it worked out with Ray. Introduced me to the deal. It took us, a while to get through all the underwriting, but once we got it all figured out, we easily were able to get it closed. And I called them up and said, hey, send me your wire instructions. And, he got paid right before Christmas, so it was a nice little payday for him. So that's kind of the beauty of the relationship with North Avenue and deals you guys bring, that you don't really have to be so involved in the transaction. You know, your involvement is really on the front end to kind of pre-qualify the deal, see if it fits, and once it fits, and then at that point is when we kind of take over, because there's a lot of kind of nuances of the USDA lending that we typically know how to do that you guys could just kind of go work on bringing us other deals. So it was a good fit.
All right. Well, great.
Yeah, so let's go through a couple of slides here. I know you guys are probably tired of these PowerPoint slides, but you go to the next one, the agenda, you can kind of see it before we're going over. You go to the next slide about company history. All right, one more time. All right, there you go. So that's the management team. Also, you can see me there. Eric Johnson, the president. Ben Shatraw and Alex Lewis are two of my partners. You know, I wanted to start North Avenue. I was really the guy with the banking background. So I brought the banking expertise to Ben, Alex, the guys, and said, hey, I think there's an opportunity here where we can kind of combine these two things and essentially be our own lending platform versus, you know, just being a private equity transaction. So the three of us kind of started North Avenue Capital back in 2015, and it's been a wild ride ever since. I don't know if Chris, I told you this, or I don't know if Jason told you, but you know, one of my goals, 5 years in, was to be the #1 USDA B&I lender in the country. We did it. So at the end of last, we finished up. We did about 131 million in 2020.
Wow.
We're the #1 lender.
Well,
about $10 million.
Congratulations, and I like to think some of our graduates contributed to that goal with you guys. So
yeah,
that's cool.
That's 25 million of that 131 went to Ray, so he helped us get to the top. Yeah, without that deal, we wouldn't have hit #1, right?
Wow.
The #2 was 120, so we were 131. So you take that one deal out, and we wouldn't have been the #1 lender. We wouldn't have did 100 million that year. So it was,
wow.
It was every deal still in. So obviously we chase big deals and small deals. So obviously the management team here, I'm the president, the founder. I run the origination for the group. Jason's one of my there's two other guys that we help us at North Avenue. But again, I'm the founder and president, but I love deal flow and I love working with people. So I'm doing deals as well. So and then Joseph and Bo are obviously COO and CFO. So
that's great.
If you go to the next one. You can go to the next one. All right, so this is kind of just a breakdown of kind of USDA loans by industry. Also, this little older slide here, but it's pretty cognizant of kind of what's going on in today's market. But you can see there's a vast majority of loans that we're looking at, 330 loans in 2015, and you can see the gamut of different industries that we do with the USDA program. A lot of people, there's a big misconception with USDA that people imagine it's ag lending, but it's 100% not ag lending. I mean, you can't even do ag because of the program. They have what they call FSA, Farm Service Agency, and that's where they originate agricultural loans. So the USDA B&I program is for industry, and you can see all the different types of industries that we originate under the program. And also in 2015, just to give you a little snapshot, of 215 lenders. In 2020, I think we were down to like 175. So it's a very niche market. And so we're one of the top players in the market. We're the #1 lender. So there's everybody. If there's a USDA loan, I'll pretty much know about it. So it'll come across my desk somewhere or the other if it's USDA eligible. So we pretty much figure out pretty quickly if it's going to be a fit. All right, you can go to the next slide. All right, so recently closed deals. So these are some of the deals Jason closed. Obviously, again, you can see the vast difference. He did a sawmill in North Carolina, aquatic center, tennis club in Ponte Vedra, $5 million, and then he did a nursery up in Maryland. So those are 3 of the deals he recently closed. Again, Thomasville Regional Medical Center was a $25 million transaction. That was a hospital in Thomasville, Alabama. I just closed a $15 million deal in Dallas, outside of Dallas, Texas, and Sanger, Texas. It was a lettuce hydroponics facility, the $15 million, and then I closed another deal I did right there at the end of the year, the $5 million marina. So we've got all different types of industries that we look at. So really the big thing with USDA loans is just really the eligibility of the market. So here, let's go to the next slide. So you can see here, he kind of contrasts USDA B&I versus SBA. So one of the big differences between SBA and USDA is really just location eligibility. So USDA, their primary MO is we want to put capital in rural America. So there's a map out there, and you go to northavenue.com/map, and we've kind of created our own kind of data set that overlaid the USDA map. So you literally just type in an address, and you'll know in 2 seconds whether it's eligible or ineligible. And so that's one of the big things with the USDA. It's got to be located in eligible area, which is a population of 50,000 or less. Now, SBA, and you can do a deal in downtown Atlanta, downtown Dallas, it doesn't really matter. But then they got the cap on the 5 million. So I know the Wells Fargo guy was just talking, about SBA. SBA does probably about $20 billion a year, and USDA, again, it's a smaller market, but it's a big market. They do about $1.5 billion a year. And so they go up to $25 million. So we're taking down a lot bigger slugs where most of these SBA lenders are taking down $1 million deals.
And hey, Eric, if you don't mind me interrupting, but would you support the fact that a lot of business owners in rural areas don't really know about the USDA program, or they don't understand it, and even more so, their local bank doesn't really know too much about it, and that's where you guys come into play because you're an expertise in it. I mean, what you want to answer that question just on your expertise?
Yeah, absolutely. That's a great point, Chris. So yeah, I'll say the reason we're here, right? So one, now I know you guys know North End, so we're a non-traditional lender, right? So if banks were doing their job, I really wouldn't be here, right? You really wouldn't need a North End capital. And the same thing with you guys, right? I mean, obviously, if a bank, if a borrower could get their own financing just walking in the bank, they wouldn't need CCTG graduates. But at the end of the day, banks don't know what they're doing. They don't know about these programs. They're used to kind of the low-hanging fruit stuff, just, hey, a doctor's office, I need some, money to buy a practice, and I'm going to get a doctor. And, that's the typical easy stuff. So when you start talking about some of the deals we talked about, that's just, bankers aren't really comfortable knowing how to lend on equipment or inventory. And so that's where it kind of gets out of their wheelhouse. And so that's where kind of government guaranteed lending comes into play. And where you guys can kind of add a tremendous value is introducing your borrower to these government guaranteed programs, whether it be SBA or USDA. That's kind of the challenge to you guys to figure out which one is the best fit for the program. So if it's in a rural area and they need $10 million, man, perfect USDA loan. Hey, I got a deal. It's downtown Atlanta. They only need $3.5 million. Well, hey, that one's probably going to be a better fit for SBA, right? So and even if it's in a rural area, but it's only $2 million, maybe it's something that maybe SBA, there's not enough collateral there, so you got to go SBA. So if you kind of learn all this, and this is a great little chart here, if you kind of learn these things that differentiate between a B&I and a SBA loan, this is going to be leaps and bounds for you as you're meeting with borrowers, because most lenders don't even know this right here, the difference between a B&I and SBA loan. Again, like Chris alluded to, like most lenders don't even know what a USDA B&I loan is. And again, when I used to be a banker, I was working with 30-year career bankers, and none of them even heard of the program. And I basically brought the program to the bank, and they never heard of it. Obviously, everyone's heard of SBA. So again, that's something you can add to the program or to your toolkit as you meet with borrowers. So that's a great chart there. Let's go to the next slide. There. Yep. All right, here we go. So this is again, credit box. Hey, what kind of fits for NHC? Property eligibility, that's what I kind of talked about earlier. And you have to make sure it's in an eligible area for a USDA loan. It's a 50,000 or less population. Again, you can go to northavenue.com/map and figure out in 2 seconds if it's eligible. Then really the big thing that kills a lot of deals is just collateral coverage. Just one-on-one discounted collateral coverage. So we'll lend up to 80% on real estate. So you can see the 20% discount. And then 30%, we'll lend up to 60, 70% depending on the machinery and equipment. So, his example there. So, 10 million on real estate, you'll lend 8 million, and 3 million, 2.1 for a maximum loan of $10 million. So, just make it simple. So if you had $1 million piece of real estate, well, I'm not going to lend you $1 million on that piece of real estate, right? I'm going to lend you 80%. And so we're going to discount it 20%. So now you've got $800,000 worth of collateral. And then it's kind of the same thing with machinery and equipment. If you got $1 million worth of machinery and equipment, I'll lend you 70% of that. And so you're going to discount 30%. And so when you add all those things together, you got to have, if your loan amount is $2 million, you got to have $2 million of discounted collateral coverage. And that's something that we can kind of fine tune and structure with you. So obviously, if you can kind of help do that on the front end, that'll save a lot of time as you bring deals to North Avenue, that you can quickly just kind of run those numbers. And, as you're meeting with the borrower, and say, hey, well, what kind of collateral are you going to offer up for the lender? Well, I don't have any collateral. I just have, my software. Okay, well, that's not going to be a fit for a USDA loan, right? Or they say, hey, I got my building, and I've got a bunch of equipment, and I'm looking to buy some equipment. Well, now that's probably going to be a great USDA loan, and that's what you can kind of bring to us. We can kind of structure a loan that kind of fits and make sure it hits these kind of collateral requirements. Then the other thing too is one of the things they have what they call tangible balance sheet equity. It's 10% for existing businesses, 20% for new, and that's just something they've always had. And that's kind of their way of kind of weeding out, borrowers that don't have really any equity or skin in the game. So we can kind of look through that based on financials, and it doesn't have to be cash equity; it just has to be equity. And so that's that's something that's really kind of our bread and butter, is figuring out how to get to that 10% and 20%. I can't tell you how many loans we've looked at with a 10.01 tangible balance sheet equity, but hey, it's 10%. It hits the minimum, we get it done now. And then the two others, again, DCR at 125, kind of a good rule of thumb. We looked at deals before, sometimes a little bit less than 125, but that's a good kind of rule of thumb that they've got to be hitting at 125 or projecting to at least hit at 125. And then also guarantors. All our loans are typically full recourse, and so they've got to have pretty decent credit and pretty decent net worth and liquidity. And obviously it varies with every deal based on the loan amount, but again, that's something you can talk with the lender or me or as you have a project. So that's typically kind of the credit box. And then you see also there's a lot more things to do on the USDA side, but those are kind of the main things. If you can kind of get these 3 or 4 things kind of figured out before you bring the deal to the lender, you'll know pretty quickly if we're a yay or nay on it. So, all right, let's go to the next slide. Oh, yeah, there we go. All right, so deal structure and terms. So again, these are one of the things I try to tell brokers that I work with is that, look, hey, I know I'm not a conventional lender. And if I was, and if the deal was a conventional loan, they would go to a bank and go walk in there and get a loan. So there's a reason, one, they're using you and they're using me via the USDA or SBA program because they can't get it done conventionally. So obviously the rate is going to be commensurate with the risk. So, we're not going to give them a 4% fixed rate loan for 10 years. And that's just, they can get that. And I always tell them, hey, well, go to the bank, and if you can get that loan, man, we need to quit talking. You need to go get that deal because that's a great deal. If you can get it, go get it. But typically you realize that they can't get it. So that's really it's all about communication, kind of setting expectations. So this is kind of where typical deals kind of shake out. Prime plus 1.5 to 275, which in today's market, that's a 6% rate. That's a phenomenal rate for some of these loans that are pretty risky. Their other option is basically getting mezzanine financing or giving up equity or getting a bridge loan for 12, 15 points. 12, 15% interest and 4 or 5 points up front. Then terms, so if it's real estate, it's up to 30 years. We have a prepayment in there. It's anywhere from a 5-year decline to a 10-year decline. It just depends on the risk, how long the loan amortization is. And we typically charge 2 points. For you guys, we usually throw in a point if you refer us a deal. We'll throw in another point for you guys, and then every loan has a USDA fee that's financed in as part of the loan proceeds, and it's 3% of the guaranteed portion of the loan. So right now, every loan is essentially 80% guaranteed, whether it's a $2 million loan or 25, it's an 80% guaranteed. And so you got to figure 3% that amount.
Yeah, and Eric, based on your origination points, you give usually one of those, to the actual broker or grads. But, I think like you said before, these deals are usually larger, right? I mean, so these deals are usually 4 or 5 million, and 1% on, 4 or 5 million. That's not bad per deal, or even higher.
Yeah, our average loan just at NAC is probably $78 million. So I mean, you're going to make $70,000-$80,000 slugs.
78,000 per deal. Yeah.
Yeah. So, but it's a nice little chunk for you. And again, the beauty with working with us is, I mean, you're not working that deal soup to nuts, right? So once you get us the deal, we get it under engagement, and we're off to underwriting. Well, you go work on other deals, and I'll call you when I need wire instructions to close, right? So that's the beauty of us, that we can't hold us through the project, and then we just need you to set us up a meeting with the borrower, and then we go straight to him and get everything we need to get it done. So, all right, so you can go to the next slide. Good thing, I kind of talked about this a little earlier, obviously eligibility, it's got to be located in an eligible area. And then just quickly, we don't do any multifamily or residential real estate. So any kind of residential lending we don't do, you can't do multifamily anymore. And then the other thing, we've got on here, which is called the 4Gs, girls, gambling, golf, and God. So you can't do churches, golf courses, casinos, strip clubs. Those are really, other than that, you can essentially do any other industry as long as it's located in the eligible area. And then he's got it here to see hospitality with timeshare. Yeah, we do hospitality, so you can do hotels. We've done a ton of hotels. But if it's more of a condo type deal like he's talking about here with timeshares, we can't do those. But so other than that, I mean, you can see it's a pretty wide open program. So you can actually do investment grade real estate, right? So that's one of the things you can't do with SBA. If you want to do an SBA loan, but I got a investment property. I just bought this commercial strip center for $4 or $5 million. Down the road, I want to refinance it or whatever. Well, you couldn't do that with the SBA because you got to have over 66% owner occupied, right? So unless you occupied personally that space, 60, 70% of that space, you couldn't do it. And with the USDA, you can. So I've financed several, investment properties, $7, $10, $15 million deals all over the country for real estate developers. So that's another great advantage of the program versus SBA. All right, let's go to the next slide. So the underwriting process is pretty streamlined. Again, we're not a bank, so one of the things I hated when I was a banker is just the lag of just time it takes. It goes into a black hole, and then no one ever calls you back. And so when I started North Avenue, I tell all our guys, hey, you should respond to anybody within 24, 48 hours. There's no excuse not to. And so that, this 5-step process here is really what we do. So if you approach me with a deal, I'll do an initial screen on it. Jason will say, hey, all right, is there a fit here? And we'll kind of figure out pretty quickly, like, hey, I think there's a potential deal here. And then Jason and I say, all right, this is a good deal. And he'd take it to a pre-flight, which is essentially an investment committee with me and my partner, Ben. And at that point, I'll basically oversee it and say, hey, do we like the terms? Terms too high, too low? We need more collateral, or we like to sponsor. And if we kind of pre-flight at that point, that's when we issue a term sheet. And then once we issue a term sheet and that gets, signed and back to our underwriters, that typically takes about 2 weeks to underwrite the loan, assuming we get all the stuff from the borrower, and then we send it off to the USDA for approval. So, again, soup to nuts from under engagement to closing, probably best case, 90 days, sometimes sooner. I've closed 2-3 weeks, and some loans that take me 5 months. It just depends how quickly the borrower want to move and how quickly they get us the information. What we do on our end, we do everything we can to basically expedite the process when it's in our shop. So I'm always trying to get it back onto the borrower to either give me the information they need, or we can have it up to the USDA. So they're underwriting it and they're putting the final approval, and then we go try to close it. So that's typically the process. It's, again, it's how fast you want to go, but I promise you're never waiting on North Avenue for this stuff. We bang it out pretty quick. Again, we're not a bank, so we have loan committees 2-3 times a day if we needed to get deals approved and out the door. So it's not a typical bank where we have a committee every 2 weeks, and you got to wait another 2 weeks before we have our next committee. So that's one of the great things about North Avenue. I see the next slide. Items to get the term sheet. So again, this is pretty standard, just like any SBA lender, USDA, or really any conventional loan, right? I mean, we just go back. These are kind of, we need if it's an existing company, 3 years of historicals, you need financial statement, personal financial statement on the guarantors, anybody that owns 20% or more, also the address. Hopefully you guys already checked to make sure it's eligible. And then also if it's an existing business, maybe a business plan, just to kind of get an idea of kind of where they're looking to go. But really the big thing too is just, hey, the source and use of funds, like how much money they need or how much money they think they need. And we typically, whatever their source and use of funds, it never matches up to what the final loan is, because we end up doing some moving around with the numbers to get to a loan that fits for everybody. So these are obviously all the things you need that any lender would need. So there's nothing really we're asking for in addition to what they would get or be asked for from, an SBA lender or even a bank. So these are just standard kind of prudent lender items you would need to underwrite a loan. So then let's see what's that next slide here.
Excellent. Contact information.
Yeah, it's contact info. So that's it's got Tyler, but I would Tyler actually is no longer with us, so I would go with Jason Hare or myself. Yeah, so that's pretty much it in a nutshell. I mean, obviously at the end of the day, you guys want to make money. We want to make money. We don't get paid till we close. We're in the deal business, so we want to close deals. So obviously the more deals you send us, the more chance we've got of hooking up and getting a deal closed. But one thing I'll promise you is that if you send a deal to myself or any one of these lenders, we'll let you know pretty quickly whether or not we can do it or we can't do it. So we're not going to leave you hanging, because that's the worst thing I've always hated, is that bankers would never get back with you with a no. They're always scared to give you a no. If they give you a no, they're scared you won't come back to them with another deal. And I 100% disagree with that philosophy. I'm like, hey, I'd rather be honest with you and say, hey, it's a no, and here's why it's a no, and I'll tell you why. If you do this, and this, it'll be a yes, right? I'm always trying to get to a yes, but right now it's a no, unless you can do this, and this, and to get to a yes. So that's kind of what we're about. And that obviously works out great for us. And so,
well, guys,
open up for any questions.
Yeah, guys, feel free to submit your questions. You got a chance to speak to one of the founders of the company here. So that's one of the advantages you have by coming through CCTG. You really have access to decision makers, and you're a decision maker, Eric. All right. So the contact info, Tobias, is going to be in your lender book. So we give you a whole lender book at the end of the week. You'll have everybody's contact information. Any other questions, folks, about the program or working with them? Anything at all? Sometimes there's a little delay, Eric, so see when questions come in. Okay, so a question came in. How far away from a major city to qualify?
It just depends. So, I mean, they're typically 20, 30 miles outside of the big MSA. I mean, you can go to that map, and so you can literally just pull up you're looking at a certain city, you can just pull up that map and really just see what's eligible. Everything in white's eligible and everything in pink is not. So a lot of times what we've done, we got a bar looking, hey, I'm trying to build something in an industrial park. Well, I mean, I did a deal out in Reno, Nevada. We looked to build an industrial building out there. We did a $10 million deal, and I essentially told them, well, hey, you can build it here, or you can build it 5 miles down the road in this Tahoe Reno Industrial Center, and that's eligible for USDA loan, and I can do this loan 100% for it. And he's like, hey, that's a great area. I'll put it over there. And so he put it built in that area, and we got it done. So that's another thing. So if they don't have location picked out, you can kind of look at that map. You can do it by parcel if you really zoomed in and see what's an eligible area. Because I mean, there's some stuff where literally you're ineligible, then across the street. So it's such a it's a dynamic kind of deal with that map. But
all right. We have one student here that's going to ask a question. I'm going to unmute her so she could ask it directly to everybody. It's Kelly. We're going to mute you, Kelly Hardy.
I had Jamie type that for me because I was a heck of a time wording it. But I live in a pretty rural area, and really what I was asking is, like, what kind of businesses do you think that people might not suspect are more specific to USDA than SBA. Like, as you were talking, I was thinking there's this big movement in the wedding industry, which was called slow flowers, which people were taking over, bringing local growth for flowers for the in the wholesale industry back into the rural areas. And I'm sure that a lot of people wouldn't think of, but what kind of businesses like that might be more likely to be a USDA product than, say, a small business administration? Thank you.
Yeah. We did several wedding venues. Those actually do fit under the program. Like I said, I just did a leaded hydroponic deal, which is obviously in a rural area. You can't have that in downtown Dallas or whatever. So I was in Sanger, Texas, which was 35 minutes north of Dallas. That was a $15 million deal. I did a marina. I was in Anderson, South Carolina. And so, some of these things that just, they don't really fit. They're a little bit higher than the $5 million threshold. And then industry-wise, they just, people just aren't familiar with it now. So, I mean, if it's a typical real estate deal, most people will try to do it SBA because most lenders understand, hey, here's the value, I'll lend you 80% of that. So when you're talking about kind of owner-occupied, not really just kind of operating businesses, if you will, something that's got, hey, you've got one guy running it and it's distribution, there's inventory, there's receivables. Those types of industry and businesses are ones that really, sometimes it's hard to get done under the SBA because lenders just don't understand how to underwrite it. So most of the SBA 7A loans I see get done are all kind of real estate related, and they're kind of, owner-occupied businesses that, is just backed by real estate. So some things you're talking about is the wedding venue, it's a little bit, special purpose type real estate, and those are the things that, could probably fit better under the USDA more so than the SBA.
Okay, somebody asked, are there populations for qualifications done by the city limits or counties?
I think it's city limits. It's 50,000 or less. So, that they just told, hey, it has to have a population of 15,000 or less. So I believe it's the city. Now, if it's located next to a city that's ineligible, sometimes, like for instance, I live in South Georgia, so Valdosta, it's 116,000 people. But the town next to it, which is Hayhira, which is where I live, like a suburb of Valdosta, is also ineligible. There's only like 15,000 people that live in Hayhira. So it just kind of depends on the map. The USDA, they use the census map, and then they kind of come up with their own little, because if you look at it, it's very odd because you'll have a pocket of white where it's just all eligible surrounded by pink ineligible. So it's whoever's lobbying hard with their congressmen to get certain areas. So it's typically done by the census map, but then something else happens. Somebody, lobbies for whatever areas, and so those get left in and left out. So I would just encourage you just go to the northavenue.com/map, and then you can just literally zoom in all over the country or specific cities and find exactly what you're looking for.
Yeah, a couple of people ask about marketing these, and I'll just answer that. Guys, we're going to go over a ton of marketing on Friday and Saturday, the two last days of this week. So we're going to go over various strategies to target these types of borrowers, whether that be networking, setting up strategic relationships, or digital marketing. So that's that question. Are there any more questions? I think you answered a bunch here, Eric. Let's see if any more pop in. But I think it's very...
Yeah, as far as marketing,
yeah,
just to touch on that, I know when I'm out there marketing and stuff, obviously when people aren't familiar with it, just always ask them, hey, are you familiar with SBA loans? And everybody, 99% of borrowers, oh yeah, I know an SBA. Well, yeah, it's basically like an SBA loan, but again, I'll say this, I'm a USDA lender, it's no better. So, because we can go higher, where you're capped at $5 million, well, hey, we can go to $25 million, and if you have multiple entities, well, we go to $50 million. I use that as kind of the talking point to get in there to kind of get their arms around USDA lending, and then I say, well, hey, where's it located? And then I go punch it in the map. And once I find it's eligible, then you just kind of go into the benefits of, hey, it's one loan,
right.
I can finance stage equipment, inventory, and that kind of stuff. And they kind of forget about the whole USDA because there's a big misperception that it's ag, and it's not ag lending. Well, the B&I side is not.
Yeah. Okay. All right. Well, if there's no other questions that pops in here in the next couple seconds, Eric, I really appreciate you taking the time to do this call. I know you guys do this every month, and we highly appreciate it. And our graduates have nothing but good things to say about you guys. So I commend you on supporting our folks while they're running their businesses.
Yeah, absolutely. Hey, we love TCTG, and Jason does a great job teaching us every month, and so it's great to kind of do it one time and kind of see what he does every month. So this is great. So hopefully we'll continue to do it. And like I said, if there's anything we can do to help you guys, just let us know.
All right, will do. Well, Eric, I appreciate it. Thank you.
Sure. Thanks, guys. See y'all.
All right, thank you. All right, everybody, we're going to take a quick break. I'm going to give you, we're going to get on the horn here about 10 minutes to 4. So essentially, I'll give you about a 20-minute break, 25-minute break. So 10 to 4, we're going to have our next lender come on board, which is going to be an SBA lender. It is going to be an SBA lender. So we'll see you in about 25 minutes or so. All right. Hey guys, so hopefully you got some benefit of that. I gave you a sneak peek at 1 out of the 50 lenders that we meet this week, and so hopefully you heard that USDA lender, big program. A lot of graduates are making 5 figures per deal. You heard one graduate made $250,000 on one deal, which is Ray Johnson's. You could go check out his testimonial on our website. So I'll see you guys later. Look forward to more live broadcasts. I got a busy schedule, obviously, that I got to do. Don't forget to subscribe to our YouTube channel, where you can see a ton of more videos and podcasts where I interview former graduates just like yourself who decided to invest in our program. So stay safe, and we'll see you later.